Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. I'm super excited today. We just have an amazing guest, Mr. Jerome Myers. Jerome, thanks for joining, brother.
I just want to say, I think you've got the coolest last name in multifamily investing, Pacheco. Come on, man. When I heard Ruben Graff say it for the first time, I was like, oh, this is awesome. Like, I need to meet this guy. So, Abel, I'm super excited to be with you today. Hopefully we can pack a ton of value into this episode for your listeners.
Yeah, we absolutely will, man. I'm one of those big believers, and I took the red pill as well. I followed you. I just, I knew the term. I hadn't coined it in a while, or hadn't said it in a while. And then I love the fact that you kind of owned it and took it in the multifamily spot. Now I see other people saying it too, but I mean, 100%, man. It's going to be a great show. So for anybody not listening or not familiar, with multifamily investing, and you haven't heard of Jerome Myers before, it's understandable. A lot of my network, and I think a lot of people that are listening, Jerome, I had a 13 plus year career in tech. I'm a sales guy. So I think I've got a lot of listeners that maybe hear you for the first time, but he's got a tremendous background. I'm going to say a couple nuggets, but you can search his name and literally see probably hundreds of podcast interviews, literally, and he can tell you about his story in tech, or some of the background engineering, different things. I'll let him really dig into it, but he is one of those individuals that just brings a little bit of light, to dark places. And I see him as a very positive and encouraging person, somebody freely giving back and genuinely and sincerely wants to help others. And so I thought he would be a great, individual to have, on our podcast. He's a coach. He's a multifamily operator. So he has multifamily real estate. He really understands it from the inside and out. He really does it in a different way than a lot of syndication people. So you hear us talking a lot about syndications, raising capital through Reg D 506B or 506C investments. Jerome does it as a joint venture, which means there's fewer number of partners, much fewer, and everybody has more of an active role. So I'm excited to hear him talk about that. But he is one of those father figures in the space and also at home, man. He's the dad in multifamily. So we're excited to talk about you. Jerome, why don't you give us your actual professional background and then what you're doing in real estate today. And then I'm going to ask you a few questions about, all the things that you're up to today, brother. So feel free.
Man, this is awesome, Abel. Again, I'm so grateful to have the opportunity to share with you today. For your listeners, I am a corporate America dropout. I was fortunate enough to go and follow the American dream starting out. I got great grades in high school that got me into a good college, played football for 4 years there, got an engineering degree, left that good college and got a good job, and was fortunate enough to break six figures when I was 26. Kept going down that path of engineering and project management. And kind of the cherry on top for this whole journey was building a $20 million division for a Fortune 550. The profit on that project was about 30%, so $6 million. And the reward at the end of that first year was laying people off. And you might say, oh yeah, that's part of it, right? Well, I was employee number 2. I started on January 13th. By the end of September, we had 175 people working on the team. And this was my first opportunity to lay people off. It cut me inside out. And I still remember the phone call where I'm talking to my supervisor. And he says, Jerome, we're going to lay the people off. You can do it and pick your own team going forward, or if somebody else can do it for you, but this is going to happen. And then he hung up on me at 5 o'clock on Christmas Eve. Spent Christmas Eve through New Year's, put a Humpty Dumpty back together again, deciding who was going to come back and who was going to stay away. And promised myself I'd never do that again. Fast forward to a couple of days before Thanksgiving of the following year, and I'm having the same conversation, except this time it's saying, hey, don't spend your paycheck on Black Friday because I'm not sure what's going to happen following that. So you want to make sure you keep some cash in reserves if you can. And it was at that point that I decided I was leaving corporate America. And so I dropped out and tried to get into multifamily. And I just fell flat on my face. I went to 10 different banks. They all told me no, told me I didn't have the right experience. And I smiled and just went to the next one. And so then I finally got fed up. I said, what do you mean I don't have the right experience? I just built the $20 million division. I had 30% profit margins. I've got a professional engineering license, an MBA. I've got all the stuff. Like, what do you mean that you won't lend to me? He said, have you bought a property of similar size and executed the same business plan? And I responded with, no, of course not. I'm making a transition. But I've got money in the bank. I've got a credit score and I've got this corporate experience. It's like, yeah, but you need a partner that has experience in multifamily in order for us to make that loan to you. We don't invest in dreams. We invest in proven business plans with proven operators. And so that shaped kind of my thought process on getting into multifamily. And so I had to make a pivot and started fixing and flipping houses. And then I was fortunate enough to get into my first partnership. And I'll pause there, Abel, and see if there's anything you want to unpack, and then we can
Yeah.
keep on.
So there is, man. There's a ton of nuggets there. And the first time I heard, your story, it resonated deeply because I had this tech background, not an engineer, but tech sales, and we had this $57 million a year. And I look at the profit or what actually got brought in, and I was super grateful to have this high paying, few $100,000 a year is what, when I finally left IT and tech, that's, when I look at my paycheck, that's pretty legitimate. But then when you look at the percentage of the millions, and the fact that once you stop working, it never comes back. You've got to grind over year. It just resonated so much when he said, look, I was a corporate kind of dropout, corporate push out, whatever you want to say there. It's, you wanted to create, your own thing. And then you're like, no, I've run businesses before. I've done that too. I've led 60 people, at a time, managerial staff, try to, manage my profit and loss of my other businesses. And, what's the difference? They're like, no, you don't have this experience, which is different. Hard to get that loan for the first time. And I've heard your story a couple times. I like the one on Will Smith's podcast where you're kind of really, digging in. And anyways, I thought it was awesome. I'm going to fast forward a minute because when I talk to other syndicators, operators, other multifamily investors, whether it's JV, purchase on their own, whatever, I hear a lot of those success stories. And right now, you've got a ton of that content out there. Go Google him, literally. Now, Jerome, you're doing amazing things today that I see when I think of multifamily and highly successful individual. I put you like right up there because of the conferences, your content, your coaching packages, all of the different things that you're doing today in multifamily to help others succeed. And they're driving a bunch of value. Like people say that. So let's start there. Like, tell me what you're doing literally today. Atlantic Multifamily Investing Conference. Let's just start there. What's your next big event and what do you actually do at these events?
Yeah, man. So March 19th through the 21st of 2021, I'm
Mm-hmm.
pulling together about 20 of my multifamily investing friends, and we're going to have what I call conference. And there is no pitch. In fact, I'm the only real estate educator that's going to talk at this conference. And so nobody's coming to sell you anything. The sell is a conference. And the whole idea is to have some people come in and genuinely give you the nuggets that help them get to where they are. And it's not the national speakers who want to tell you about having $1 billion under management or $500 million under management. Nobody's going to tell you how many doors they have unless I share it when I'm introducing somebody. We'll have people who have in their personal portfolio over 2,000 doors. We'll also have people that have less than 10. And the whole point is to inspire people and let them know that it's possible for them too. I think a lot of times because people are famous, we make an excuse that we can't do it because they're just so far away. And so we want to have people across the spectrum give their discourse on various topics. And we're going to take you end to end. We've got a 4-step process that we use to help people learn multifamily investing. Is finding, funding, fixing, and flipping deals. And the whole idea is we're going to take from each one of those, and we're going to have subject matter experts come in and give their perspective on how they've been able to achieve deep success. And I'm asking practitioners to talk, not people who just teach, but people who are living and doing this business on a daily basis.
Yeah, that's so cool, man. That's a great way to give back and a great way to help others. And, when I first started looking into multifamily, went to the conference, went to the attendance, I dropped a ton of coin on many multiple different programs, like probably five programs. And, if you're in the space, you kind of know, oh, there's 15K here, 8K there, 20K there, 15 there. And so that adds up pretty quick. And really it's like, well, I didn't even know if I wanted to do it yet. I did, fortunately. That's why I dropped the coin on the second or the third package or whatever. But man, I needed to know what was really going on. And unless I heard it from other people and like their stories, I didn't really know if it was for me. Podcast today, one of the reasons I love giving back and having, guests like you on is it gives somebody an opportunity to like test the waters, check it out, see if it's for them before they're going to dive in it. And then I have a lot of, network people that are like they're asking me, well, how do I get in as a passive investor? How do I get in as an investor, put some money in? I'm like, oh, I can't spend 3 hours talking to you every day. There's a bunch of people that want that time and like, here's a podcast, go listen to these. But anyways, the conference is an amazing way to do that. So how many days is it? And, tell us a little bit about maybe the agenda. You'll have people that, like you said, practitioners, but maybe tell us what you know so far. I know it's in the future.
Yeah, I mean, so we're going to start at 6 p.m. on Friday night, and we're going to have our opening session and walk through like how I got into multifamily. Bring my buddy Duran up. He's going to talk about us sitting on the stoop and figuring out that the guy that owned the complex owned $700,000 or was making $700,000 a year.
I like the story. I like that story when I heard it.
We'll bring up my buddy James, who's been a partner on all the deals, and he'll kind of set the tone for what we're going to do over the next couple of days and do some mindset work. I really think mindset is super important. And so we'll dive into some mindset. And then we'll open back up on Saturday morning and really dive into finding deals. How do you actually get into a new deal? How do you find something that's not broadly marketed? I think a lot of people are confusing leads and deals in the space right now. A lead is something that doesn't actually make sense. It's not a profitable property for you to purchase. A deal is something where you can actually make some money. You can come in, execute a business plan, grow the value of the property, and then on exit, make a big payday. And if you do it right, cash flow along the way. And so we're going to walk through what that actually looks like and bring a few people on who have become what I consider experts on finding deals. This year, John Blanton is going to come in and give that talk for us. And, he's closing on an amazing deal. He's buying something at, I think he's going to have like $500,000 worth of equity on a deal that he's buying for about $500,000, right? So he's going
to that's a crushing deal, man. That's a crushing deal.
And that's if he fully executes the business plan. So, he's a success story. He's been in our coaching program. So we're going to have him share that, but he brought that with him when he came. He brought that ability to cold call and kind of walk you through those strategies, techniques, and tips. We'll move into funding deals. And so John Azar, who works with Peak 15 Capital, he's going to talk to us about how you find money, how you raise money if you want to go in that and be incredible when you go talk to folks about your deals. we'll move over and get into fixing it. And so I'm going to have the property manager that manages the biggest part of our portfolio tell you guys what they do, how they grow valuation, things you should look for when you're talking to property managers. And we're just going to move through that. I'll talk about managing the property manager from an asset management standpoint. And then the final thing we're going to talk about is flipping it. And so the majority of that is going to be on Sunday morning. And we're going to talk about, hey, how do you maximize your sales price? What do you need to be doing when you're positioning to get into a refi, and just kind of roll through all of that. So
Yeah.
you get that. We'll sprinkle in some success stories from people who've been in the programs and can tell you what they got and how they got it. And the whole goal with those is to inspire you and let you know it's possible for you. Whether it's your first deal or your next deal, there's going to be somebody that speaks that you're going to be able to relate to.
Yeah.
And the other thing, Abel, if you've been to a lot of these conferences, it's common that there's only white guys in their 40s and 50s that are on stage talking.
That is so funny. My wife goes, she goes, "Are you gonna have like women on your podcast?" I go, "Babe, of course I am gonna." She goes, "Okay, just make sure there's some diversity there." But it's funny, color and age too, man. But go ahead.
Yeah, I mean, and so I have a problem with that, right? I think there are more voices out there than the traditional ones that you hear all the time. Nothing wrong with them. I think they all have great stories, and I've really enjoyed learning from them.
Yeah.
But my goal, my desire was to bring people to the stage that you're not going to hear anywhere else.
Yeah.
And they don't have platforms built, but they are actual practitioners, and they can give you the real world experience so that you come into the space eyes wide open, instead of going into a space where you've been sugar coated. It feels like HGTV. Everybody makes money every single time, and just to sell you on a high ticket program.
Yeah.
So
I thought that's what happens in multifamily. We all make tons of cash and everybody lives happily ever after and make millions. No?
there's a lot of people who are going to lose money over the next 2 years. A lot of people.
If you don't operate it right, if you didn't buy it well, if you didn't find it, fund it, fix it, or have the right flip mentality on it, then yeah, you're probably not in the right spot. So hey, this is a good transition point, right? Because I wanted to highlight like what you're doing today, which is, man, that's pretty freaking cool. For me, I always saw the person at the front of the stage, as hey, you're the expert, you're teaching, I'm going to learn. Then I saw the organizers, like they are like the super crazy. Hey, what makes you think, Mr. Jerome, why are you hosting this, man? How come you can actually do this? What makes you think you're good enough to do this? So help me with mindset in this area. Help me here.
So I'm on that mission, right? I knew that nobody else was going to create the slate of speakers that I wanted to put on stage. It's not the best way to make money on your conference, right? Because the people who are known have a following, and some of those people follow them to other places to hear them speak, right? So when you bring people up who don't have very large platforms, it's not likely that you're going to get the reach that you would had you chose some of the other people. And for me, it was really about scratching my own itch. I've been invited to the conferences in 2020 where there wasn't a single man of African descent on the card for speakers. And for me, that was preposterous. I've been invited to events in 2020 where there were no women on the card as speakers. And for me, I want something different. And so we've got a diversity slant on it. I think the content is even more touchable. I think there's less posture. It's people just openly sharing and having a transparent conversation about their experience in multifamily. And a lot of them are telling people the things that they wish they knew before they got into the space, because that is, in my opinion, the reason why you go to these things. We learn more from our mistakes than our victories. And it's easy to bring a bunch of people on stage to let them beat their chest and talk about how great they are. And I think this is the thing that qualifies me, Abel. I'm more than willing to tell you guys the mistakes that I've made along the way and the mistakes that I've seen other people make And it's part of the reason why I host a podcast, Multifamily Missteps.
Yeah, that's awesome, man. That's awesome. And just hearing that, like, there's some people, and I'll give a little vulnerability about myself too, right? Is like some people just didn't think that they could do whatever it is. We're talking about multifamily, we're talking about commercial real estate, but there's listeners somewhere that just like need to hear this for a moment because they like really missed I don't know what it is, like a limiting belief. They didn't think they could do it, whatever that it is. They didn't think they could buy a commercial building. They didn't think they could be CEO of their own company. They didn't think that they, could ever host a super amazing, successful event where people's lives are going to be changed. And then until like one day somebody, said, no, you can absolutely go do that. Whether it was consciously, subconscious, whether somebody told them literally to their face, or they heard the voice, it like set them free and it said, you know what, I'm going to go do that. And that's why that's why we see them sometimes at the front of the stage or putting it together. It's like they believed it first and then they went and did it. Right. And so, man, that's great to hear from you, brother. It's great.
Yeah. One more point on this, if you'll allow me.
Please.
I used to work at a company that had 17,000 employees and we had one African-American executive. And I used to tell him all the time, I'd say, Craig, you are the light that gives people like me the thought that I could actually achieve that. And so, Abel, I think the only time that people actually can give a valid excuse that they can't do it is when they don't see anybody who looks like them that did it, right? I think that is really the only time, because if somebody who looks like you did it, then what makes them so much different than you, right? So like, let's do that first. And we're taught in like elementary school, like one of these things doesn't belong, right? So there's never anybody on stage, and this includes women in particular in multifamily, just because of what we're talking about, right? If there's nobody on stage, then you can say, oh, well, I mean, we don't do that, right? And so I want to crush that. It's 2020. I think it's time to change the face of wealth. I think it's time to show people examples of folks who are crushing it, so that that person who's sitting out there and saying, well, I just don't know if we do this, can then say, oh, well, they did it, I must be able to do it too. And I think I'm a great example for that, right? I got dreads, I got tattoos that are visible. Like, hey, maybe I should be playing football somewhere, but I'm not. I'm buying apartment buildings and I'm showing other people how to do the same thing, right?
Yeah, I love it, man. You know what? My partner that I do deals with today, and he kind of helped me mentor, coach me, all that stuff. To your point, my buddy Devin Elder. So when I partnered with him on my first deal, I did the last thing on my mind was like color or age. What it was for me was you were a sales guy where I was, and I was a manager and director, and you were just a sales guy. Like, I achieved more than you, if I could say I could achieve more than you. How the hell are you doing this and making millions of dollars? And, oh dude, if you could do it, I could do it. Like that's what was going through my head. And if he's listening to this, I probably told him something similar. I don't know if that direct, but I go, man, dude, that's an everyday average guy like me, a sales guy that figured it out. And that's how I viewed it, yeah, like me.
Devin's a phenomenal guy. Every time I get to hang out with Devin, I really enjoy that. Devin's a great guy, and what he's done is nothing short of impressive. I would never call Devin a regular guy.
I grew up with him. I knew him for years. He's evolved and changed, and man. So anyways, but yes, back to your point though, you viewed somebody like, yeah, that guy was like me. I could do that, right? And then you kind of grow. The people that knew you at work back then, the people maybe you laid off some of them, or the people that you had success with it. Then I have a feeling if they described you today, up on stage, social, whatever, would probably say something similar. Oh man, Jerome, that guy, is phenomenal at X, Y, and Z, but not everybody saw that, right? Back then you weren't allowed to shine, maybe, so to speak.
Yeah, I mean, I didn't want to, if I'm totally honest, right? If we talked about the podcast and the count and kind of the exposure that I've been doing over the past 18 months, 20 months. Before that, I didn't want to be seen. I didn't want to be known. It was flying under the radar. You don't want anybody to know what you're doing, et cetera, et cetera. And I've had to change that quite a bit in my approach.
Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. Man. So, okay. So we've talked about this really cool, topic, and I'm happy to have you on it because, somebody's going to hear it and go, I can go do this. And the people that I'm trying to reach, on our podcast are like investors, people that didn't believe they could invest and get into apartment complexes. They didn't believe they could either do it themselves or invest or have my money or even save enough or whatever their, position is, right? The way you've done some of the things that you have, your visibility on social, the visibility out there. Let's talk about those next steps tactical steps that someone can take to learn to become, a passive investor. And then I'd kind of like to lead into like your tactical steps of like getting your visibility, your exposure, and that kind of thing out there. But what were some of those tactical steps that somebody listening to this right now is like, you know what? Yeah, Jerome's doing it. I can freaking do it too. I want to invest in an apartment complex. What do I do? And then maybe somebody that wants to go, further and have your exposure. We'll talk about that too.
Yeah, Abel, I'll say I think there's two different tracks, and I'm a little contrarian in this. And so there's the passive investing track, and then there's the active investing or the operator track. And we'll talk passive investor first because I think it rolls up into the operator track. With the passive investor track, I think the one thing that really jumps out for me is you shouldn't invest in things that you don't understand. And if you haven't spent any time really getting a good, thorough understanding of the asset, how it performs, what the risks are, I'm not sure that you can actually evaluate whether or not the returns that are projected are likely. And I think that is probably the biggest difference between going and buying something on the stock market and investing in a private placement related to real estate. Sure, you're probably thinking about investing because you know a person and you trust that person, and that's part of the equation. But I think there are three things that you really need to do. You need to understand the market, you need to understand the operator, and you need to understand the deal. In each one of those, I think you can evaluate independent of any of the other things so that you don't have any influence, data driven. And if you can do that well and feel very confident about it, and it meets your risk tolerance, then I think you place that capital with the understanding that this isn't something that you're going to be able to sell in a month or two or even 12. Most of these deals are going to be 3 to 7 years, depending on the operator and their business plan. So I really, really, really encourage people, if they're going to be passive, to do the time, take the time and really get into the due diligence so that they can make sure their capital is going to be safeguarded. And I don't know if you want to roll around on that before I go to the active.
I want to hear more about your active, but I will plug. I started as a passive investor. I invested 3 times, twice myself, and then once my wife. And in about 400 doors. And that's kind of how I got started. So I'll plug my ebook that we wrote here. I have a 67-ish page resource for you on exactly what Jerome mentioned on market, the operators, your team, and the actual deal. So it's basically like, it's my thoughts on how I invested in $93 million of commercial real estate. And now that I look back on, I go, oh, here's actually what I did. I had to look through those things. You had to, get comfortable. And then we got a little goal setting in there too. So that's really good. Thank you for, bringing it up. And then active, for people that want to, like, man, I want to get my hands dirty. I need to learn by doing. I want to jump in there. I don't know if I'm ready for the syndication. Well, let me pause here. Let me just let you do your thing. What is active? What's the difference? Tell us your thoughts on that.
Yeah. So there's what I consider a misnomer, and it's because I don't tend to profit from this, right? There are people who will say, hey, invest in a deal passively, and that'll start getting you some experience so that you can go active. Abel's one of the people who've been able to go from one side to the other. But a lot of people just end up being passive investors for the rest of their investing career, or they turn into money raisers. But if you actually want to be an operator, and the way that I characterize joint ventures and syndications is kind of like this. I wanted to be a pilot when I was a kid, right? And I lived close to an Army base. There were fighter jets that flew over just about every day when I was outside playing. And I was like, one day I'm going to be in one of those. I ended up being a little too tall, and I didn't go into the military, so I didn't get that option. But the fighter jet pilot opportunity exists if you're doing joint ventures. So in a joint venture, everybody has an active role. There's no seats where people are just kind of hanging out, going along for the ride. Somebody's looking for targets. They might be dropping bombs, whatever the case is, navigator, whatever that case is, those folks have an active role in the deal. And for me, and my first experience, if we go back to how we opened this podcast, I got the opportunity to be in a joint venture. We bought a 23-unit deal in Richmond, Virginia, and we did everything. And my role was asset manager, and I was also helping out with the construction and a bunch of other things as we went through that project. And we can come back to that if you guys want to later. But the point is, if you're doing a joint venture, everybody's active. There's opportunity to sign the loan more often than not. And you don't have to really worry about raising any money because the partners in the deal are the ones that are bringing the money. When I think about a syndication, I think about a jumbo jet. And so you got your ticket, you're walking through the airport, you take it to the lady or the guy, he scans it, she scans it, you go down the jet bridge, you get greeted with that big old smile from the stewardess. She's waving you, inviting you on, telling you welcome aboard. You peek at the pilot and the co-pilot, they ignore you because they don't want to talk to you. And then you go sit in your seat. And you sit down and you look out the window, you see the baggage person and the food person putting stuff on the plane. And your job is done. You've gotten to your seat. You get on the plane, it goes up, it comes back down. You get to the jet bridge, you get up, you collect your things, you get off. That's all you've done. And that's what happens when you're a passive investor in a deal. You pay, right? You don't get dollar for dollar in equity. You pay the people who are operating the plane, which are the general partners, to get you from point A to point B safely. And that is a great experience if you don't have interest in being an operator, because that will allow you to place your capital in something other than the stock market. And so I'll pause there and just see where you want to take it.
I love that, description, and kind of, it is exactly, another thing we talk about it in our book, right, is like active versus passive, because there's some professionals that make really good W-2 income, and that professional that right now is trying to go active, but they're one of the things that they're missing, and I bet you me and Joe could probably agree on some of this stuff, is like, you're trying to do a flip, a single family flip, a single house, and you're trying to go lay tile, and you're trying to go paint the house yourself, and you're trying to go do this. You make so much money at your W-2 job. You're taking a job where you make $100 or $200 or $300 an hour, and you're trading it for something that you could be paying 25 or 30 and actually make really, you're going the wrong way because they think they're going to win in this side hustle and go active. And I don't recommend doing that at all. I don't recommend putting your active time in that. You have to weigh out how much money you're going to make on the W-2 versus this other one. The plane analogy on the jumbo jet was like, it's perfect how I thought about it too, because I was the guy, and the reason I'm talking about this, I was the guy that tried to do single family flips. I did single family for 12 years. I got up to 8 houses, and I had my high paying W-2 job. And every couple of years, I would save up 25, 30 grand. I would do it with my own money. I'd put it in time. And all my nights and weekends for years were single family. It was finding, funding, fixing. I didn't flip. I held because I've all that freaking work. I didn't want to sell them. I held and I got up to 8 properties. But I think about the time, effort, and energy that I was spending away from my W-2. I would have probably been better to stay at work a couple extra hours, grind out a couple big deals. I would have probably made a little bit more. But anyways, the jumbo jet analogy for those people that are high earners, man, if you have enough money and you're making enough money to pay your ticket and just get served up your drinks and get your toasty little blanket with your pillow, like, you're gonna love it. If you want to get your hands dirty, I do recommend going multifamily all the way. So anyways, that's kind of my thoughts on those two. What do you think about that, Jerome?
Now, I agree with you 3000%. And that's why I said there's two different paths, right? There are some people who, and I smirk all the time. I actually just posted on LinkedIn about this today, who say, hey, I'm gonna make more money in my side hustle by working on it 10 hours a week than I do on my W-2 working on it 40 hours a week. I just kind of look at them like, how, if you're that efficient, if you're that effective, why aren't you doing that part already?
40 hours a week. Yeah. Switch over there.
It doesn't make sense. And so, and it's not, part of that is for effect, but the balance of it is like, let's get clear. You don't need to replace your income. You need to replace your expenses. And if you're living in a financially fit way, your expenses don't equal your income. So let's figure that part out and know that you get taxed differently when you're a real estate professional. And so, it's great that you're making $100,000 a year. The reality is you're probably only seeing 60,000 of that, if you're seeing that. And so now, but if you change the way that you get compensated through real estate, you might be making more net than you would when you had your job. But none of that really matters because you've got to figure out how to cover your expenses. And once you figure out how to cover your expenses, you're financially free. And then you can really turn the gas on and get to that next level, which is growing the business or whatever you really aspire to have or be.
Yeah. Yeah. I love it. Love it all. For those of you that are, I'll say somebody like me, I was the breadwinner. My wife was able to stay home when we had our first baby. I have a baby girl, 2.5 years old, and a 1-year-old. And when she finally stayed home, we transitioned her work and her time and effort and energy away from the W-2 job. I'm like, stay home, please help me with the kids. But all your extra effort and energy needs to be into our real estate business. We had those single family deals going. So she became, she's our chief operating officer of that company. So she was our real estate professional. And the world of tax, reduction opened up to me at my W-2. I go, man, I now can write off all of this cost segregation, accelerated depreciation in my deals. And she was the real estate professional before I switched over full time. So if anybody's listening and you're a couple and a pair, there's some power investing $100K cash into a deal with cost segregation study and accelerated depreciation. If your other is not making at least 50 or 60K, you may be able to write that completely off. So anyways, I go down a tangent. There's a lot of strategies there that we can really win on. So Jerome, let's, now, how did you get to where you're at today? Like, just, high level overview. You did a 23 unit. What was your next deal? What were the next steps? And, talk about those deals and those properties. And, I'd love to, just kind of hear how you, what were the moves? What were the steps?
Yeah, man. So I do smaller deals, right? So we did that 23. We did a 20. That was the first contract that I wrote where I was the lead. In the same day, we closed the 8 unit with that 20. Then we did a 26, and then we did a 10. And I feel like that's all of the deals that we've done so far. And now it's kind of crazy, but now we're working on a 120 unit development where we're going to do some workforce housing here in Greensboro. And it's not affordable by any stretch, but it's just workforce housing. And so we've been able to basically prove concept, test about 4 different areas within the town to see which assets are performing best for us, and then make a bigger splash and bigger play on, a bigger deal that's going to come online in 2022.
I love it. Deal number one, deal number two, deal number three, deal number four. Just keep flowing, baby. Now a development, which is really cool. A long process. Ground, first all of the horizontal work, the grading, the drainage, the mechanical, utilities, the permits. Oh my gosh. But once you finally have your horizontal stuff ready, the vertical starts going up, and you're going to change a community. And it's like you said, it's going to come online in a little bit while in the future, but we're all looking for that future, the improvement of your community. And you've tested out a few of those data points already on multiple deals, which I heard you're a big data guy. So that's awesome, man. Congratulations on that track record and success. How many years was that? How many years total was that deal from start to now?
The development deal, we rezoned it last year in September, so a little over a year ago. And now we're going through the process with HUD. We're going to submit our application next week, and then just go through the process of getting our construction documents. And we hope to break ground at the beginning of Q2 of 2021. And it's about, an 18-month construction cycle. And
HUD time, baby. 221 DR4, 43 years amortized, under 3% interest rate, like 2.2 or 3. I don't know. It's something sick right now. And you only need like 20% down on the loan, if that. There's so many great things about HUD. It's going to take you a little while to go through it. Concept package. You're submitting everything out to it, but once you get your card punched, you're only going to do development this way. I would promise. I don't know if I promise, but I would guess that's the only way you're going to fly for a while.
You got it, brother. And there's not a whole lot of people who've done a D4 loan. And so for me, that is the part that's most exciting, is being able to open that door for some other folks as well. I'm all about it. I didn't, and let me take it back to the stoop, right? I didn't have anybody that I could reach out to and ask to go sign a loan. And the more people that I meet in this space who have multi-generational businesses, they're able to go to the bank, they're able to call the capital for their kids and open doors for their kids to, start early and basically retire early. And I want nothing different for Kay and Leah, which are my 2 daughters.
Yeah, dude, you're gonna set, a different trajectory for your family, and you've already done that, and it'll continue on. Yeah, we got to get you back on and talk about this construction deal, because I also have the reason I know this is we're going through this HUD and kind of going through all this stuff, like right now on 100 plus deal, which I don't know what I can and cannot talk about. I go a little funny on these podcasts, so like SEC, I'm in the syndication, totally different from your JV world. You're like, yeah, I can talk openly about it. So anyways, but I'd love to talk with you and rap with you about that specifically, maybe later down the road once you're, in flight, and we can talk about your, all the learnings and cycles on that stuff too, man.
That's exciting. I'd love to come back and share. I mean, look, man, I was listening to 40 hours of podcast content as I was self-educating. I wasn't smart enough like you to go through a course that had curated content. And this is where I got my education. It was by far the most inefficient and ineffective way to get to the place that I've gotten to. But because I didn't go through the courses, I think I might bring a little different perspective, because I've learned from everybody. Mm-hmm. Now, with that said, I've learned from their free content and not their paid content. And that leaves a lot of stuff out. And so for the folks that are listening to the podcast, I want to caution you, trying to garble it together from a bunch of different sources and a bunch of different perspectives will leave you frustrated, at times overconfident, but in the end, still reaching and trying to figure out what you know and what you don't know that you don't know. And that is the scariest thing, because not knowing something can have you run into a brick wall.
Yeah, for sure. Hey man, I had my timer set, and I think I went way over. We had a great conversation, but again, we'll have to have you on again. I'm sorry if I took too much time. Where can our listeners, our network, if they want to get a little closer to your world, they want to learn more, they want to attend your conference, what's the best place to reach out to you?
Yeah, I think the best way for folks to reach out is to hit our website, myersmethods.com. So MYERSMETHODS.com. And there you can get a free 4-step guide that will help you understand more about investing in multifamily and how we go through the process and the stuff that you can bring to the deal if you're interested in getting involved. You don't have to be rich in order to do this business. And, I just want people to get exposure because I think it's a great way for people to build wealth. Kind of envious of what you guys have been able to do down in Texas. I don't think there's a lot of markets across the country that have experienced the growth that you have in value, but, we're not doing too bad out here in Carolina. So I'd love
Yeah.
to see us get into it.
Get it on. Well, that sounds great. And is there anything we didn't touch on or didn't ask, something you wanted to highlight that we didn't cover today?
Man, Abel, I just want to tell your listeners, I love being a dad. And I think that is probably the most important thing that any dad can do is be a great dad. Uh, I love when we're on conferences or conference calls and I see your son, and I don't think I've seen your daughter yet, but I certainly see your son climbing up in your lap and you're talking and managing him all at the same time. And I think for too long, dads have gotten a rap for being business builders and not being present in the home. And I'm really excited to see more dads scale businesses and be great dads. Right. And I probably said dad 20 times over the past 2 minutes. But the reality of the situation for me is it's my favorite role. If I could just be a dad, that's what I would do. And we started a mastermind around that for dads in multifamily. And the whole goal is to help them scale their business and figure out how to be a great partner and dad, because I think that is nirvana for a lot of people. Instead of having to resign yourself and think, hey, I've got to be a provider, I don't have time for this other stuff, or the kids won't miss me, or whatever else we do to rationalize putting the business in front of being a dad, or being a dad in front of business and feeling like you can't be a builder because you have an affinity to hang out with your kids. We want to dispel that myth and let guys show up in a big way and help them get there quicker so that they can create more time and location freedom for their families.
Man, that's so cool, that you kind of think that way. And yeah, for those that don't know, this year during these conferences, and most of it's virtual, you haven't figured that part out. You got that. But when we're attending, I'm still trying to get the nuggets, trying to network. And Jerome's talking about, like, when we're on these virtual conferences, my son in my lap, and I'm like trying to feed him or do this and that. I don't want to miss the events, and I want to be there. And that's what happens every once in a while. And then if you're an investor and you've had a conference call with me, like you've probably heard them more than a few times. So thanks for dealing with me. But those things are important to me. My faith, my relationship with God and with my family. And so the ability to, like, juggle those, I want to say juggle, just combine them rather is probably the right word. Combine them all together with multifamily has been, like, it's been life-changing. It's been really cool. Really cool.
Keep doing it, brother.
Yeah. Amen. Well, I really appreciate your time, your effort, your energy. Thanks for giving it back. And we just appreciate having you on the show, Jerome.
Hey, well, this was amazing. I wish you continued success on this newer endeavor, and just look forward to when you cross over that 100 episode milestone, because
Yeah.
we to celebrate at that point.
Get it on, get it on. Thank you very much for joining us. If you're listening to the Five Talents podcast, I'm your host, Abel Pacheco. If you heard something you appreciated today, go to our podcast, leave us a 5-star review. We want to have other superstar guests like Jerome. And also, if you heard something that was valuable, leave Jerome a note, leave him a written review on what was amazing about the show. We would appreciate that. And I'm sure he'd love to hear from you as well. So thank you very much. Thanks, Jerome.
Thank you, Abel. Talk soon.
All right, bye-bye. Thank you for listening to this episode of the Five Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the Five Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the Five Talents podcast.